One.
Hi, Warriors. Hope everyone had a good holiday. I'm ready to get back to work. How about you? All right, so when I was on with you guys on Monday, I said I favored the long side of the euro, that my buy zone was 8.5 to 8, and we had this candle prior. So it was good for about 90 pips, 840. Yeah, and this is the formation. It's a triangle. It implies another move to the upside. Maybe it's wave 4, and that would mean wave 5. I think 110.50 is viable. I just want to have one big caveat about currencies. Make sure you have stops in, because what's happening in Ukraine could end up happening in Ukraine. And I'm not sure how you would think that the dollar would soar if there was a nuclear issue and that plant melted down, despite whoever does it, accidentally on purpose. If that happens, you would expect a huge move up for safety. I almost feel most comfortable with risk off positions right now because, the market's been whistling past the graveyard about the Ukrainian war for a long time. Things have devolved, especially in the last couple months, and even if that coup attempt was just stagecraft, there's still some things going on. I mean, drones are going into Moscow. So the markets have not taken into account geo risk for a long time. And I think we're at this stage of escalation where you really can't count out anything that would seem insane, because war is insane in itself. I guess there are just wars, but insanity reigns in wars. So be careful and don't have a mental stop, because you could wake up, or the market just really get away from you. I wouldn't want to be long euro and closes back under 108. That changes the picture for me. So that's a good, probably could have BE stops if you bought it good. And you also should have, in these environments, be tactical and take pips. If you paid 850, you had two nice candles, you had 80 pips. So you put 50 in the bank and you're still there, and then break even stops, and the worst thing that happens is you make money. Moving on to cable, I still think it has a stronger chart pattern that we're going to challenge 130. Okay, and maybe 132. Aussie, probably a weaker move up. I'm going to be interested if the dollar hits my targets, which it's still quite a ways away. Maybe 3 handles away, 99. I'm looking for prints under par. So we'll see where the Aussie goes. The Aussie's not going to thrive in a risk-off environment, and we're getting a little bit of risk-off in the S&Ps. And I said last week that high did not confirm. There's your daily chart. So we're getting a down day. Again, this 43.50 is going to be important. That's going to be the throw over on the wedge that it held. And NASDAQ's been acting a little bit weaker than the S&Ps. And again, I told you what I was doing in VIX. This is my way of playing risk off. I'm going out to December and buying $20 and $25 calls, trading at 14.45. Little gap up. You have to be patient. I'll add if we pull back to 12, and what happens in Ukraine is a non-event. And my reason for buying VIX down here is the market is priced for perfection, and the VIX is saying everything is okay. The VIX is saying, no reason to worry here, buddy. It's acting like everything's perfect. And you know what? Things aren't perfect. We have a Fed trying to figure out what to do. We have an election year coming up next year. We still have plenty of geo risk everywhere. Now throw Israel on the equation with Iran. You know, Netanyahu could use some cover from all the people that are in the street. So I do pay attention to the geos because that's where your huge sigma moves come, especially if the market is wrong-footed. So the other part of the equation to have this risk off work would be a top in the end. You know, I talked about it. I have some shorts from, you know, the 60s. The high's been 45. What, got a few ticks over it. 45.07. So, you know, you still need to use less leverage and wider stops to try and build a position here. So here's your weekly. You know, I think it's a failing rally. And it could come down quite sharply, maybe back at least to the breakout, 38.50, 39. That would just be normal. That would be like the S&P's pulling back to 4,200, which was, you know, such an important level, right? That's where we accelerated. So keep an eye on gravity this week, and we cap it off with NFP. But if that reactor melts down, it's going to overshadow economic reports this week. So trade well. Join us here in the room. Share your best ideas. Become better. Iron sharpens iron. And most of all, don't forget to count. Don't just count your pips. Count your blessings. And set up an account with TradeView Markets and become part of our community. If you're not being supported where you're trading and you'd like some interaction with Mike and me and Gerard, and we have Paul in the room. We have a lot of good traders in the room. Luis Pinto is in there. So join us. And, you know, there's some nice actionable ideas. I'll just wrap it up with gold. Gold is acting well. Last week I said this should be part of a weaker dollar scenario. And, you know, this action last week looked good, and a lower yen is part of that scenario too. And it looks like we're going to get this close over 1930. I still think 1970 is viable. And silver's really kicking in gear now too. I've been long from 2240 in here, although it was here on the way down. And my stop survived because I use a 50-cent stop. I, you know, had taken some partials, but I'm still long. I think we could see $24.5, $25 silver in the upcoming days as well. Good hunting. Hope we're adding value to what you're trying to accomplish in a very difficult endeavor. Don't think you could read a trading book over the weekend and be ready to go Monday. That would be like, well, I'll read a book on brain surgery and I'll see you in the operating room on Monday. It's the same. So thanks for paying attention. Hope these ideas prep you for the week ahead. Adios.